Happy New Year, Luke Gromen. How
Happy
are
New
you,
Year,
buddy?
Dale. I'm doing
Great to
well. How
see.
about yourself?
Pretty good. Great to see you, Luke. So,
Likewise.
I keep an eye on your stream and things that you're paying attention to. One thing that stands out is you're saying the Fed better start easing quickly or it guarantees a Trump presidency. Can you explain that? Can you
Those
please
are
explain that to us?
those are strong words, but it's directionally pretty close to what I think
Yeah,
my views are evolving to, at least for the moment. Obviously, they're subject to change, but in the aftermath, and take this with a block of salt because I'm not a political guy, but watching him win in the landslide in Iowa
yeah,
um, is interesting. And I think from a media and popular opinion in America, I continue to think the Beltway, broadly speaking, the coasts still do not understand the phenomenon that is him. They do not understand the mood still in flyover country USA regarding him, and that is what it is. But as it relates to the macro, uh, I came away from the Iowa landslide in his favor, thinking that that probably starts to impact the thinking in Washington and
yeah.
the impacts on markets. What I mean by that is if we get some sort of non-linear decline in stocks and the economy, I think that plays well to Trump.
Yeah, okay.
If they overinflate and we get high rates of inflation in the second, third quarter, I think that plays to Trump. And so it's they I think very much need to keep things Goldilocks, which is going to be harder and harder to do, but there is a path forward to it. But I think it takes some of the I think it cuts off the tails on both the upside and downside. But all else equal, gun to my head, if you're the Biden administration, would you rather have 2% inflation and 3,000 SPX or 3,500 SPX, or 4% core inflation and 6,000 SPX? You'd much rather have the latter. And so that's where I think what we saw with Trump on Tuesday, I guess it was, I think is potentially important moment.
Okay. There's an expression that Iowa picks corn and South Carolina picks presidents. So, we'll see what happens. But, you're talking about levels, but the levels of S&P and the fact that we're starting to blow off and melt up now actually portends that maybe we get a high in the market in the first quarter and that we might be heading down in the summer and fall, which I agree there's probably never been a more important time for what the trend is in equities going into the fall. I think that's really going to be the deciding factor as well. So I know you pay attention towards to WTI, Luke, and it's a very important part of your narrative. And last time we talked, you thought that perhaps when we were much higher, that the Fed was in there selling some WTI contracts, and it still doesn't look great to me. So you said, well, this will buy time. So is this still going to be able to buy time? I have some targets down here around the 62 and a half level in crude. We could rally to 79 first, but um, there's nothing here telling me that we have a bottom in crude.
I agree. I agree. I'm short-term bearish on crude, and for a pretty straightforward reason, which is there's an article out on Bloomberg about a week ago that highlighted that the spike in tanker rates had caused U.S. oil exports to become uneconomic in Asia, and that
Okay.
they cited multiple Asian buyers who said, where we have switched to Asian, or it's U.S. crude is no longer economic in Asia. At the same time, or literally a couple days before, Saudi cut selling prices to Asia. Saudi also went out and borrowed a bunch of dollars, which some analysts said, oh, look, this is proof they're not de-dollarizing. I look at it as, oh, look, Saudi is using the dollar markets. They're borrowing dollars that, oh, by the way, Yellen desperately needs to finance U.S. deficits to finance a price cut to undercut shale.
Yeah.
And so I did that.
All
I went
right.
on the EIA's website. I looked at what U.S. exports to Asia were. U.S. exported about I want to say it's 4.2 million barrels a day of crude in October, which is the latest data on the EIA's site. Asia was 42% of U.S. exports. So if 42% of U.S. exports are now uneconomic as a result of tanker rates and being outcompeted by the Saudis, that suggests inventories are going to be maybe a little higher than expected in coming weeks, and I think that's bearish for crude. Now, do I think we're going to get a crash in crude? No, I would be a buyer of it. You were talking about your levels. I would say $60, which I had, I
Yeah.
pick out of kind of the air, mainly because for me, below 60, U.S. shale starts to become threatened in terms of its production. And from a political and geopolitical standpoint, I don't think the Biden administration will allow that to happen. As intellectually offensive as that is, we can look back to 2015. We can when oil crashed. We can look back to 2020 when oil
Yeah.
crashed.
Right.
Both times, it took 2 to 3 to 4 years for U.S. shale production to regain prior highs after it had begun to be shut down, production begun to be shut down. So the way you stop that is you stop oil from crashing. So I would suspect that we would start to see headlines about the Biden administration buying oil to refill the SPR, were it to get down into the 60s or whatever, to support the oil market. Because again, if you let it go too low, shale starts to come offline. And what that means is you have just ceded the oil market to the Russians and OPEC Plus for the next 2 to 4 years.
Okay, because I saw a guy, John Kilduff, is a oil analyst, and he was saying, and you just brought up the Saudi cut, that they're losing patience and that they may do what they did in 2020 to knock out the shale production here in the U.S. And they're also kind of frustrated with member countries in OPEC. So this that he thought that was a possibility. Maybe that's what takes us to 60 rather than 40. Also, Luke, you said one of the worst investments, and then I'm going to get to, what you've been so right about is bonds, especially if you're involved in a war. So we had a pretty nice bond rally here, Luke, from here to here. But I mean, compared to the decline, it's still nothing. Do you think that this is all it has, or could we get a pullback and then another wave of bond buying in sometime in 2024? Or do you think we completely abort? It was just a bear market rally and we're going to new lows and new highs in yields, which some people believe. This would really be the biggest surprise, I think, to most market participants would be that the 10-year attacks the 5% level and takes it out sometime this year. Which camp are you in?
I think 5 years our cap, basically, or excuse me,
Okay.
5% is our cap. I think I don't think it will revisit that for I think still non-consensus reason, which is a reason, which is I think some version of incremental US dollar liquidity will be forthcoming.
Okay.
And so I think the 10-year treasury is still a terrible investment on a real basis. You might make money, maybe the
Yes.
yield goes to 4.4, maybe it goes to 3.8. To be blunt, I don't care. If it's at 3.8, it's because the dollar's at 98 and going lower, and Bitcoin's at 60,000 and going higher, and gold's at 2,200 and going higher. S&P's at 5,000 and going higher. And so that the 10-year treasury bond is now trading as a risk on asset. And I think that's the most important takeaway as
Okay.
we watch how the 10 years trading over up until 2022, you can look at the 10-year Treasury yield, and when financial conditions tightened, 10-year Treasury yields fell. And when financial conditions loosened, 10-year Treasury yields rose. And since middle of 22, roughly, those have flipped. And now, when financial conditions tighten, Treasury yields go up. And when financial conditions loosen, Treasury yields go down at the long end. That is emerging market sovereign bond behavior. That is risk on behavior. And that makes perfect sense. The United States government has a fiscal problem. So, and this fiscal problem is quite acute. And that's what the bond market is telling us, in my opinion. So I don't have a strong view on the 10-year. I think five's the cap. I think we know that. It's probably actually a little lower than that, simply because whatever the level of the dollar is dictates the level of treasury dysfunction, the level of treasury volatility, as indicated by the move index. Every time the move index has hit 130 on the upside, going back 4 years, more dollar liquidity has come in, sometimes from the Fed, sometimes from Yellen running down the TGA. Last fall, it was from Fed jawboning the dollar down, and then Yellen radically shifting versus expectations, issuance from the long end to the short end, and basically using the reverse repo as synthetic QE. But dollar liquidity comes when Treasury volatility gets too high. Now, what's interesting is to hit 130 on the upside, 140 on the move index in September 2022. The Dixie was at almost 115. In September 2023, the Dixie hit 107. Now we start this year, Dixie's at 103, 102, and we were early last week at 127 on move already.
Wow.
And my guess is, given the action this week in the 10 years, probably higher than that. So my interest in the 10-year is more
Dollar related.
I think we've gone from sort of, the worst bond market in 150 years in the last 3 years. I think it's now going to translate to the dollar. They've got to get the dollar down to keep the treasury market functioning, because they're just not going to let the treasury market defund the government, in my opinion.
Okay, so I'm thinking maybe we could go to 440. That was a major technical area, and this was 120 bips to the downside. So if we go to 440, that would take us down to about 330, 320, which is a major area of support. Was major resistance for a long time, and here we are, at this 330 level, 340 right here, which is where we could go to. And I
Okay.
think that may coincide with a dollar peak, Luke. I'm looking for about another 100 or so points to the upside in the dollar, around maybe 104.80, 105. And then I think we begin to slide again under 100 next time.
That makes perfect sense with what I
Yeah.
just laid out in the treasury.
Okay.
If the dollar goes to 104 to 105,
Yeah.
the 10-year is going to be at 440, I think, in a hurry. And yeah, at that point, it's going to be a sloppy equity market while that happens. And then there's going to have to be some more dollar liquidity laid out there from Treasury, from Fed, some combination of the two, under the auspices of getting the Treasury market. And I think the market is increasingly picking up on this, which is why it's 115, 107, 105, so on and so forth. I think that makes a lot of sense. That makes perfect sense to the technicals that you're highlighting.
Okay. So I wanted to ask you about you're bullish gold, you're bullish Bitcoin, and congratulations on that trade. I know it's a long-term trade for you, and we had one of those classic tops on the ETF announcement in Bitcoin. Do you think it's possible we could see 30,000 again in Bitcoin before we launch the next advance? Because I'm looking at this as being a completed wave up here, Luke, and what a wave. I mean, 33,000 from 15 to 49. So just a normal market correction could take it back down to about 32. Um, you're still a believer in this and holding this for the financial narrative that you have working going forward, correct?
I am, yeah, and that's where, in terms of the technicals, I see what is that the 50 that it's starting to flirt with there? Is that the 50-day moving average? Yeah,
Yeah, down here
or the
there's
9?
it's a weekly
Oh,
the
okay,
weekly 250
okay,
intersect around 30 grand. Sometimes it's a magnet.
gotcha.
So
Yep, yep. It's Bitcoin, right? So the volatility is inhumane. So it's
do
one of
you
those
ever
assets
sell?
where
Do you ever
oh
sell?
yeah, I sold most of what I owned in June of 2021 at around 48,000. And
Yeah.
to be blunt, I paid off my house. I
Oh,
just felt
nice.
like it was a little frothy or whatever. I sold most of it. I still had a little bit. I bought it back too early. It's not like I'm
A market
I,
timer? You're gonna
yeah, right. I started
yeah.
buying it back that fall, and then in the spring of 2022, and kind of through 22, I got really aggressive when there was, it seemed like there was blood in the street with the SBF and the FTX stuff last
Oh
fall. I
yeah.
got a lot of it in sort of the low 20s, but I do sell.
Okay.
I don't.
Just curious.
Yeah, yeah, yeah. But I am a big believer in it long term, and I'm not selling. I'm not selling here either. I would be, it is what it is. I don't do sort of I don't really swing trade. I could see technically where it could pull back as you know, but I would be a buyer on that weakness, and because what I'm seeing on the fiscal side for the US to me is just it's the big thing to get right. It's the absolute big thing to get right. And I think Bitcoin is one of the best, highest alpha ways to play that what I'm seeing on the fiscal side, which is increasingly acute.
And would you say that Jerome Powell in December became Arthur Burns and not and not Paul Volcker anymore?
In short, yes.
Okay.
Question is why. But I don't know if it was. I mean, the data are weakening, but they're not catastrophic. The tax receipts are not catastrophic. I think there's a real chance. I I think there's a real chance that what part of what Biden and Xi talked about in San Francisco was the dollar, that there was some sort of San Francisco Accord agreed to, and that
Okay.
part of Powell's pivot was a sit down post San Francisco, where Yellen and Biden said, look, we, the United States, just agreed to weaken the dollar. It's in our interest to weaken the dollar, and you're going to play your role. You need to help us weaken the dollar. Because to me, the data and even Powell fighting Q, or even fighting what Yellen's been trying to do with QT for 6 quarters. So something changed, and I just wonder if it wasn't partly um, something from
Politics.
from that meeting. Yeah, the politics. The U.S. needs a weaker dollar to finance the deficits. Full
The
stop.
world
Like
the
we
world
know
does,
that.
doesn't it? Not just the US,
Absolutely,
the whole
absolutely,
world.
absolutely.
So then that sets a stage for gold. And we had this panic up here. Top was put in Asia. I don't know if it was the Fed again or the banks were caught real short. Maybe they needed help. And to me, I think this is setting up a nice buying opportunity between 1940 and 1900 for us to finally break out and stick. And that probably coincides with the dollar. You still like gold long term here, right, Luke?
I do. Absolutely. I mean, I could see that the technical pullback you're highlighting there makes perfect sense to me between the U.S. fiscal situation, and then what we're seeing in
Middle
energy
East?
markets, oil markets. Wall Street
How about,
Journal at the end of December said
yeah,
20% of oil was sold outside the dollar last year.
yeah,
Some portion of that's going to
de-dollarization.
get settled in gold, and because no one
That's
else trusts
interesting.
anybody else's sovereign debt, and nobody else wants to run the deficits to supply the sovereign debt, even if the other parties trusted it. So you've got a bid from oil for gold. You've got a bid from the U.S. fiscal situation, the reserve currency issuer from gold. So secularly, I continue to really like gold.
are the miners, which have really underperformed gold for many years now, and there are some major cycles that were due for lows here in 2024, and a lot of them are making new lows, even though the physical market is stronger, which it has been for a few years. Any forays into mining issues, or is that just too murky for your subscribers?
No, I've been very bullish on them. I've owned them. I've been wrong. They've done
Okay.
nothing for 4 years,
Yeah.
it's especially interesting to me given that over that time the gold to oil ratio, right, is a proxy of their profitability, their mining costs, their margins, has actually risen. The gold to
Yeah.
oil ratio has trended higher. That should be good for them. So it is somewhat puzzling. The vast majority of my exposure to gold is through gold, and I continue and have said, if you want to own gold, own gold. Don't try to get cute. This cycle is unlike any other anybody alive has ever lived through for multiple reasons, but the biggest part is that this is the first global sovereign debt crisis in 100 plus years. So I think if you want to own gold, you want to own gold. And when I say you want to own gold, you don't want to own paper derivatives. You want to own gold. So it's the miners have been frustrating, shall we say.
Yeah,
I
they've
think
been
ultimately they still work, but they've been frustrating.
because production cost is about 1,200 for most of these miners. So at even where we're at right now, they're printing money. And
Yeah.
with oil prices coming down, right, that's a major cost of mining. That should help their bottom line.
Yeah.
I think, I'm not saying it's a generational low coming in these miners, but I think that the lows that we set here in the next month or so could be good for a 2-year hold. So
That would make sense.
for me that's like getting married.
Yeah.
For me to
Okay.
hold to be talking 2 years. All right, it's not dating when it goes out 2 years. Luke,
Understood.
let's just talk geo a little bit here. Things seem to be escalating in the Middle East when you get Iran's Revolutionary Guard firing ballistic missiles. Who wants a war between Iran and the U.S. more, Iran or the U.S.? Is it? It could be a
I
tie. They
I
both
don't
want it.
know. Like I think
Yeah.
they both want it. They both don't want it. I wonder too. There is if there's a can I is answer C like China, right?
Okay.
Or Russia. China Russia might also be
Pushing the
pushing
agenda.
it. Yeah, that
Okay.
and it's also OPEC. Like I just said, if the Asian oil market is now thrown off by shipping costs, which are, I think it's mostly just, a demand for tankers, a rate issue, but what's going on through those key shipping zones can't be helping shipping costs all in. Um, it might be a market share issue. OPEC might be in favor of that broadly speaking because it seeds the all critical Asian market in oil, which is really the only oil market in the world that's really growing. It's the most important market for sure in terms of both size and growth rate. Uh, it seeds it to OPEC. It seeds it to the Middle East. So I,
That's
I
interesting because the
yeah.
Arab League came out right away after that missile attack that landed in Iraq and condemned it. Um, so that was almost unanimous condemnation by that part of the world. I don't know if it's a Sunni Shia thing, but Shiite thing, but definitely, and most of those countries in the Arab League are oil producers. So you might be onto something there.
Yeah, and it chips, if you're Russia, if you're China, it also chips away at US credibility on some level, right? I mean, why is the dollar the reserve currency? Well, because we enforce all the trade lanes. Well,
Now we don't.
get busy inflating or get busy or defending the trade lanes or get busy switching the currency. But that's a little bit more of a sort of secondary, sort of tertiary dynamic. I think I look at that oil market and the flows to Asia and what's happening, and I can't help but think those two things are related.
How about what's happening with the lack of funding for Ukraine? Where does that go? And does that play a role in the financial jigsaw puzzle?
In the short run, no, in my opinion. In the longer run, in the intermediate term, uh, I think the Ukraine may have been a very important revelation for the US Beltway, for Russia, and for China from the standpoint that we were in some certain key areas unable to produce munitions in a sufficient quantity for what was only a proxy war, let alone if we were to go to an
Wow.
industrial war with a major power, we couldn't keep up in some key areas. And I think that raised some huge alarms in the Beltway. So I think in the short run, I think Zelensky's going under the bus. I think, there's either going to be some sort of peace or, but where we're doing that sort of awkward thing we do where we ghost him. He's texting us for more money and we're ghosting him, not
Wow.
replying. Um,
Hero
and I
to
think
zero in a year.
well, right. And
It
the reason
happens
that is,
faster in this business as a trader.
look,
But
if we were winning the proxy war against Russia, he'd still be a hero. Like all you
right.
need to know is how, the US media is kind of doing the Homer Simpson backing into the bushes meme with Ukraine to know who's winning there. It's Russia. And they're winning because their industrial production allowed them to win, supported by China. And so that I think leads to, you know, I think there'll be greater impetus to spend more money on domestic production,
Okay.
aside of an
Yeah.
election year, but that's where I think it plays out in the longer term. But in the short run, I think, yeah, I think we're doing the quiet backing away thing like we did with the Kurds and like we did with the South Vietnamese and like we did with the Taliban that it's sort of that fade in, I think we're
Yeah.
just backing away
Well,
from them.
I would think that our adversaries feel delighted and emboldened. And are you worried about the way China's imploding? FXI, new lows, took out the lows from, a couple years ago. I think more dangerous Xi is when they're under pressure and having problems than if they were prosperous right now.
So I was looking at that yesterday, and I don't want to make too much of 5 minute macro, but it was very interesting to me. You've got the Chinese stock indices breaking down across the board, like you just noted. Commercial real estate there is obviously problematic, but in particular the stock market, and it was getting just pounded in our face yesterday. What's happening with
Yeah.
Chinese stocks, and two really counterintuitive things happened. Number one, 10-year U.S. Treasury yield rose sharply. That is not how the 10-year traded in 2015 and 2016 when China was having troubles. But number
Yeah, it would have been
two
a flight to quality then.
would have been a flight to quality, and it was sold. Number one. Number two, Chinese junk bonds are apparently at their tightest spread since 2007. So
Wow.
in this crash in China or incipient crash in Chinese stocks, 10-year treasuries are sold and Chinese junk bonds are bid. None of those fit the picture. And other than, okay, stocks are going down, but it's not the disaster that is being painted in the stock chart per se, because junk bonds should be blown, a spread should be blown out in China.
And they're
And who
not.
knows?
They're
Maybe that's
tight.
sort of their home team, saving that. I don't know. But that with the 10-year selling off is a very incongruous picture. Very incongruous picture.
I was thinking about what would be the most contrarian trade in the world, and it would be shorting Japan and buying China. What do you think of that?
I don't. China, yes. The like the China, the Alibaba I see up there, the Chinese
Yeah,
internets, yeah. That I like the long side of that trade.
yeah.
I don't. I
You have a hard time wanting to be short the Nikkei
I
with the
I do
collapsing.
because I just I think that they will continue to repatriate through the year. They've got some weapons, some credible weapons. Anytime they want to, make the yen go up, they can make the yen go up. So I
Okay.
don't like that one on the funding side. I would rather fund it with, 10-year treasuries, to be honest, than
Okay.
or the dollar. I would rather,
Okay.
short the dollar, buy Chinese internets as the most contrarian trade rather than shorting Japan.
All right. So, Luke Gromen, my takeaway is the dollar will be a sacrificial lamb to keep our economy going, keep some bid in the bond market, and an attempt to keep the incumbent in, and stick with your long gold and Bitcoin. And if you have another rally in bonds and you're underwater, get out.
I think that's a fair summation.
All right, Luke, always great. I want to thank you for all the years that you've been coming here and contributing and educating, edifying our community here in FACE. And I hope that 2024 is your best year ever in all ways.
Well, thank you. I really appreciate that. I've always enjoyed coming on and as an early supporter of FFTT, very, very eternally grateful. So thanks again for having
Yeah.
me on.
So follow Luke on X at Luke Gromen and check out his letter from the forest to the trees. And you got a taste, just a taste of what Luke thinks, and in probably the most critical time period in financial history of our country coming up here in 2024. You need watchmen to help you avoid stepping on landmines. And Luke does that. Thank you, Luke.
All right. Thanks, Dale.
All
Have a
right,
great day.
Luke Roman, everybody. Hope you enjoyed it. I know I had fun. And you can join the team in about 10 minutes on the Morning Edge, and we'll see everyone to wrap the week tomorrow. Don't just count your pips, count your blessings. Thanks again, Luke. See you
Thank you
soon.
very much, Dale. Take care, my friend.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.